All right, folks, welcome back. Just as a reminder, yesterday there was no upload. So Monday, August 2nd, 2021, there was no video. Okay, so today's Tuesday. We're just doing a very light review of what price is done, and the annotation is going to be very, very light as well. And the reason why is we're in non-farm payroll week, and it is also the month of August. So in your notes, this is why I tell everyone, if you're going to do vacations or anything like that, try to do it in the month of August, because the month of August typically is very lame when it comes to price action. Only second to January. January and August are the lightest of trade frequency and volume from me as a trader. Like, I don't want to engage that much on these months because historically and from a seasonal tendency type perspective, they tend to be lackluster, meaning the trading is not as well liquid as I would like to see, and movements are consolidated. So just try to keep that in mind this entire month. Have your expectations very low and go into every year with that in mind. Now, that's not to say that every August is lackluster and doesn't ever produce, big price swings. I've said this in the past since I've been doing mentorship. There invariably will be a month of August where it creates some crazy type of volatility and a lot of opportunity will be present. But as a steady diet of every year, it's always the same thing. It's a lot of movement in August. That's not true. So I just lead in with that as a reminder. That way, throughout this month, it'll be a lot of hindsight data lessons. It's not going to be me sitting in front of the charts, trading and doing examples, because it's not conducive for that type of learning. September and October, November, yes, but not so much here. All right, so that brings us to the dollar index daily chart. So what have we done here today? Pretty much nothing. Okay, we've had pretty much done what we did on Monday. Nothing. Okay, it's just trading indecisively. It's not trying to go higher. It's not trying to go lower. It's being held in consolidation. Now, I like the idea of the dollar index slipping down to take out these relative equal lows and trade into that volume imbalance and maybe into this buy side imbalance, sell side inefficiency. I like the idea of that. Does it need to trade up into this area in here first? It could, but if it does trade up there, I'm thinking it's only going up there to go down. I don't see it going from here higher, because we've had 1, 2, 3, 4, 5 times pressing higher, 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 and then we had this breakdown. So to me, if we rally up first and it's not crazy big range, if it just trades back up into this area in here, then that to me is enough to set up a potential sell-off that would take us down into here. Does it need to do that? I would prefer it did it, but it can just roll right over here. Now, the worst case scenario is, and this is what I'm trying to allude to, it could go sideways all the way up into the non-farm payroll, and then non-farm payroll be pretty much a dud too. So I'm not excited about this trading week. I think that the only thing that's of any concern for volatility is on Thursday with GBP. Okay, so you can look at your economic calendar and you'll see that there is a high impact news driver for GBP. Dollar index hourly chart. Again, I mentioned I was going to keep all the annotations light, just drawing your attention to areas where I think it might be important. So if we're in here, we've made a lower run there. We had a break in market structure there, traded back down in, rallied, and one more time went below this low, and then we had this reaction here. Now, if this is going to be bullish, I'd like to see it get on with it and not trade back down into this wick here. We do have a small little fair value gap, but I don't even want to see that closed in. If it's going to go higher, what does it go for? It could trade back up into this area here and this breaker. Overshoot this mitigation block, which would be the high, low, lower high. So we have sell sign of bounce, buy sign of inefficiency, breaker, mitigation block, all converging in this area here. Now, does it need to trade up to that degree in terms of creating a short-term premium? I don't believe it needs to do that. But if it does, I'd be looking for a quick, sharp rejection. Kind of like this, something like to that effect. So we'll see what we get, but I'm not trying to be 100% one way or the other. So usually I have to cosign. I'm saying that I'd like to see it trade higher first, but only to go lower. Dollar index 15-minute time frame, just range bound. Hasn't been doing much at all. Now, again, that's not to say that there isn't scalps that can be taken in 1-minute charts and 5-minute charts. There absolutely is. But for high probability, directionally driven trades that can be utilized as short-term trades, swing trades, or position trades, we're not in that environment right now. So if you're a position trader in mind or a swing trader, this is not the environment that spits out a lot of entries for those types of trades. So you're going to have to sit on your hands and wait. And it can be very frustrating for a short-term trader because you have to be nimble and take your profits quick and be in and out. Not get in and have the luxury of saying, okay, well, this is really running. Let me take a majority off the trade and leave a small portion on just in case I get a swing trade out of it. So we don't have that current environment right now. So it's in the summer doldrums. It's non-farm payroll week, so that means the normal protocol is we are looking for trade setups between Monday and Wednesday New York Open. Once London close occurs on Wednesday, that's it. No trades. No trading, no nothing. But because we're in August, I'm electing to say I'm sidelined all week. I'm not expecting to do anything. I don't see anything. I'm going to study and see what it does, how it runs for liquidity. And the main focus for this week is not so much the non-farm payroll event on Friday, but it is the Thursday GBP event for its monetary policy. Eurodollar daily chart. I still like the idea of these lows. I'm just perplexed as to how much more, if it needs to do it at all, it needs to go higher, then it would require going up into here. I don't think it needs to do that. So if I'm wrong about dollar index and say it goes up a lot more than I would like to see, and Eurodollar breaks down, if we take out this low, then I would look for any daily or 4-hour or 1-hour chart, fair value gap, institutional order flow entry drill, breaker, bearish breaker, or optimal trade entry on a 15-minute time frame. Once this low is taken out, to ride into this area here. But I don't trust it yet, and if it were September, I'd probably already be short right now. But because we're in August, it could stay range bound. And before I get into this, it might sound like a whole lot of double talk. Usually I'm selling one side of the marketplace to you. Okay, I'm saying, okay, this is the convictions I have about this side of the marketplace, and I don't have any convictions about the opposite side. In other words, I'm either really bullish and I'm telling you what I'm looking for and what it should reach for. Notice that I don't have that here because there really isn't a strong stance for the bull side or the bear side. So it's 50-50. And when it's 50-50, that's not high probability. So what do you do in that situation? You don't do anything. You watch and you study and you wait for things to get into those higher likelihood, higher probability trade conditions, which you're not seeing in August. So we have Eurodollar on an hourly chart. And again, trading range hasn't done much. Didn't take out this high here. We did take out this low with this, but didn't take out this low. So it's just really reluctant to go anywhere in any kind of hurry. Small little scalp intraday today, but in my mind, British pound had a better drop, as we'll look at, but even that wasn't all that big of a deal. If we break down, trade down below this buy side imbalance, sell side inefficiency, and it comes back up into it, it should act as resistance. So I'm watching that level there. Disregard the wick here because that was a stop run. So erase all of this from the opening down in your mind when you look at this chart. Focus on this swing low and just basically think of this not being there now. 15-minute time frame euro dollar. Again, not real clear, not real obvious what it wants to do. I mean, we can look at and see little gaps and such in order blocks. Relative equal lows here. It could set up a nice run for that. That would set up that higher push on the dollar. That would balance out. But it's not something I'd be wanting to trade. It doesn't give me the framework for anything that would just make perfect sense for me to get involved in. Finally, moving on into the British pound. This is the daily chart. You can see how I took out the relative equal lows here, swept below that. I gave you this all last week, running above this spot liquidity pool. It did that. And today we had a little bit of momentum intraday, as we'll see when we get in lower time frames, but still not really directionally driven. Hourly chart, British pound. We've rallied up rather nicely. Had an imbalance in here. Draw that out in time. Completely closed it in here with the bodies. Do this on your own chart. I'm trying not to have any annotation because I don't want to instill a desire or instigate some means of participation on your side, because I'm 100% sideline. Not even paper trading, not even demo, nothing this week. I don't have anything that I want to work with. Now that might change obviously tomorrow, but as for right now, I see absolutely nothing I want to be a participant in. But if you draw your low here, draw that out in time, you'll see that the bodies are just bumping up into that, and this small little wick just goes beyond it, but it's the bodies respecting the low of this candle here, which is the premium high of the sell side imbalance, buy side inefficiency. Between this candle's high, this candle's low. We almost got completely into the closure there, just fell short. We ran up into it intraday here, came back down, and then quickly came back up and filled in the fair value gap there. And we're just consolidating now. There's a small little area of interest for me. Buy side imbalance, sell side inefficiency, order block, relative equal lows. So that to me looks real promising. So if this for whatever reason sees a bullish dollar and we break down, I'd like to see that there. Otherwise, this looks pretty juicy. So they could attack that on Thursday if it's still there. And finally on 15-minute time frame British pound, bearish order block, which is all these consecutive up close candles. Buy side liquidity here. We rallied up and dropped back down. Now, if you were to take this on your own chart and elongate that, spread it out, if you will, you can see a market maker sell model here, distribution, and then it attacks the original consolidation here. If you look real close, you can see a market maker sell model. So we have consolidation, runs out, comes back, reaccumulation, smart money reversal, low risk sell, distribution, and attacks the original consolidation here. Whereas we have a market maker sell model here as well. Consolidation, back into consolidation, reaccumulation, smart money reversal, low risk sell, distribution, and attacks the original consolidation right there. They're there, and you got to train yourself to see them and find them. So if you're looking for them, you can find them. But if the narrative isn't clean and clear, even with them being in here, I'm not really interested in participating. But it's really nice to be able to pull them out, even in hindsight, when you're not taking any action like it is now in these really slow summer weeks in August. So obviously, very boring video, nothing really to speak of, but Monday was the same way. I wasn't really interested in talking about anything there, and I did some shopping. So, all right, and that's going to be it, folks. Nothing terribly exciting, obviously, but we'll take a look at what transpires on Wednesday and Thursday. Thursday will probably be a little bit more eventful. I might do a live recording of the news driver that releases around GBP and do a live study. But you won't obviously see it until it's recorded, but I'll do a live study and try to mark up the chart and see what it wants to do before it does it. And we'll watch that for a Thursday lesson. So until I talk to you tomorrow in Wednesday's review, be safe.